Welcome back to Market Minute USA. Today we are stepping back from the 60-second chaos to look at the bigger picture. If you've been watching the charts this week, you saw something historic. The Dow Jones Industrial Average finally touched the 49,000 mark. On the surface, it looks like a celebration. But behind the scenes, Wall Street's elite are whispering a very different story. Is this a breakout, or is it the ultimate bull trap of 2026? Today, we are going to break down the three massive pillars that are holding this market up, and more importantly, the cracks that are starting to show. We'll look at why Nvidia's dominance might be hit by a new regulatory wave, why the recent inflation data is a silent killer for your portfolio, and what the big banks like JP Morgan and Goldman Sachs are doing with their cash right now. If you have even $1 invested in the US markets, you cannot afford to skip this analysis. Let's talk about that 49,000 level. Psychologically, these big numbers act like magnets. They draw in retail investors who are afraid of missing out, the classic FOMO. But when we look at the market breadth, we see a troubling trend. Only a handful of stocks are actually driving these gains. While the index hits new highs, more than 60% of small-cap stocks are actually trading below their 200-day moving average. This is what analysts call a top-heavy market. In 2021 and late 2024, we saw similar patterns right before major corrections. When the foundation, the smaller companies, starts to crumble, the giants eventually fall too. We have to ask, is the US economy